Hello, and welcome to our third episode in Your Path to Sell, our video series dedicated to smart strategies for making the most of this critical step in your business's future. In this episode, we're looking at market readiness, or to put it better, is the market ready for your business? I'm Richard Frank, Chief Marketing Officer at Capstone Strategic, and I'm joined as always by Brian Goodhart, our Director of M&A Advisory Services. For 2 decades, Brian has led mid-market transactions on both the buy and sell sides. He guides clients throughout the deal process to help them maximize value and realize their long-term goals. Brian, so far we've talked about an owner's readiness, a business's readiness to be sold, but today we're looking at the market factors that owners need to take into account. So our first question of three is this. When owners think about selling, how often are they actually thinking about the market correctly?
So, to be very honest, this varies quite a bit based on the industry and the owner's preparedness or whatever conversations they've had either internally with their own team or externally with friends or colleagues or perhaps other people involved in transactions. But it's very safe to say that most business owners, or at least the business owners that I tend to work with, honestly don't think very often about how ready the market is to accept a business like theirs. It's simply not relevant to them. And it's very unlike, for example, publicly traded companies where you can turn on CNBC or Bloomberg and see all kinds of news about those companies and how the market's perceiving the company that day, whether the stock's going up or down or whether the bonds are moving in a certain direction. So with publicly traded businesses, there's this ever-present reminder about how the market perceives them that is just very, very different from what a private business owner sees. A private business owner often has no idea from day to day or month to month or even year to year how the market is appreciating or understanding their business. However, when you want to transact your business, you're forced to think about this. And again, for most of the business owners that I work with, founder and family-owned businesses, this is not something they've given a lot of consideration to. So what we have to do is we have to talk about this very real phenomenon that there are times when the market is more or less interested in your business. And the reason I do this is this goes back to something that Ben Graham, actually Warren Buffett's teacher, talked about a lot. And he said how every business owner has a partner called Mr. Market. And some days Mr. Market is going to be very optimistic and he's going to quote you very high prices for your business. And other days Mr. Market is going to be very depressed and he's going to quote you very low prices for your business. And Ben was talking about publicly traded companies, and that's how to think about them. That every day the market came in and quoted you different prices for the business based on how it felt that day. Again, factors largely outside of the business's control. Well, now for a private business owner, you've got to reckon with the same thing, that the market is going to have a certain feeling about your business. And honestly, there are times when some businesses are very, very appealing to the market, where there's a lot of market demand for those businesses. And other times, there are instances where the market is less interested in those businesses. That doesn't mean transactions don't happen, but it does mean the way that they're appraised and the valuations put on them could differ quite a bit from one time period to another.
Is it really just a situation of how good or bad the economy is right now, or are there more like specific elements that make the market agreeable or disagreeable at any given point?
Sure. Certainly, there are macroeconomic factors at play. Like we should never gloss over that fact. So there are large macro factors such as interest rates or inflation or GDP growth. But those are going to pervade really all businesses and industries. However, then we can drill down to say, okay, are there unique things in your industry that are going on that would make your industry more or less attractive? Are there interesting things in your geography? Perhaps you live in an area where the economy is growing very rapidly, even though the economy maybe in your wider state or your region isn't growing so rapidly. So there may be geographic factors that are very specific to you. In addition, there could be size issues, whereas smaller companies or companies of a certain size range are very, very attractive. for a variety of reasons, especially that when we get into private equity, because private equity tends to carve the world up into platforms, which are companies that would be foundational, that we could build upon, or add-ons, which are something we could add to an existing platform. So there again, there could be different feelings about each of these. So it does vary from one firm to another, one region to another, but it's something we need to begin to start paying attention to, because when the market is ready for a business, we have to be ready to decide whether we want to meet that demand and go out and investigate.
What are the biggest market forces right now that actually impact whether a deal gets done and at what value?
So there are a lot of more market forces at play, no question about it. So the market forces at play, again, those kind of large macro factors I talked about, interest rates, inflation, tariffs, GDP growth, the prevalence of AI. Those things are large macro factors that are impacting the broader economy and the broader market. So they will certainly impact everyone. But what's going to impact whether deals get done or not are largely going to be specific to the buyer you're working with and also to the seller themselves. So what do you want excuse me, to receive from a transaction? Those financial and non-financial items I talked about earlier. Those are really going to determine whether a deal gets done or not. Now, certainly, if you're dealing with a situation where your prospective buyer relies on public markets, if you're dealing with a prospective buyer that has funding issues that are going to be impacted by the things I talked about, then certainly that can impact whether a transaction gets done or not. If the financing doesn't come through, if the debt financing or equity financing doesn't happen or doesn't happen as to the terms they need, that can impact whether a transaction happens. However, we need to mitigate that on the sell side, because we should be talking with our prospective buyers to understand how they're going to arrive at the capital they need to complete the transaction. So we often hear this referred to as proof of funds. Do you have the money or the ability to get the money to foment this transaction? If you do, that certainly goes a long way to getting a transaction done. Sellers prize certainty. And so that's what we really need to think about is markets are very uncertain, and they're moving, they're in motion, they're dynamic. So what we want to do is we want to try to introduce as much certainty as we can into the situation by dealing with qualified buyers who put forth good offers with good proof of funds. That helps give our sellers the certainty they need to engage in a transaction with some reasonable confidence that it's going to be completed.
Given the variables that you're talking about, and some of which, as you mentioned, are completely out of the seller's control.
Sure.
How should an owner actually think about timing a sale?
Sure. So the timing of sales is actually a word that I never use. I never use timing a sale because I wouldn't use it for the same reason I wouldn't advise you to time the stock market. Okay. And if you are working with any competent financial advisor, he or she will tell you that we don't time the market. We don't do that because none of us know when the market's going to be at its peak. Instead, what we should do is we should look at those three factors: your readiness, the business's readiness, and the market's readiness. And we should be monitoring all of those things. And again, it's not going to be black and white. But when we feel that we are kind of leaning towards readiness, and we feel our business is doing pretty good and it's ready, and the market's in a good position too, that's what we should be going for. None of these things are going to be strictly green or red, right? It's not going to be that simple where we can just say, oh, it's clearly this is a sell sign, or clearly this is not a sell sign. And it's not the way that this works. This is much more complex than that. Instead, what we have to look at is what are the preponderance of the markers telling us? And again, I usually tell people of those three, if two line up, you should probably go to market, okay? Because getting all three, getting you at your absolute peak of readiness, getting your business at its peak of readiness, and getting the market at its peak of readiness are so difficult to time. And you're going to try to time all three. You're waiting for that hypothetical perfect moment. It's just not going to happen. It's so impossibly difficult to catch that falling knife. What you really need to do is ask yourself, am I ready? Is my business ready? And then talk to a good transaction advisor and say, okay, what is the market's opinion right now for businesses like mine? How are they being valued? Are their transactions getting done? And you then make a call based on the advice of good qualified counsel.
Good counsel. That's what we're hoping to be here, right? So thank you, Brian, for your insights, and thank you for our viewers for joining along. You can't control the market, but you can understand how it's likely to respond to your business. If you're thinking about what's next, let's talk. Reach out to Capstone Strategic on LinkedIn. You can email us at growth@capstonestrategic.com or call us at 703-854-1910. Until next time, thanks for joining us and have a great day.